I understand that you've been consciously reducing your exposure to crop insurance. And correct me if I'm wrong here. As I understand, it stands at just 1% of your product mix as of Q1 FY21. Given the kind of recovery that we've seen in the rural end of the economy, and that has been really strong, overtaking urban as of now, where do you see the share of crop insurance grow in the future?
Actually, we've not been reducing our share of crop insurance. Our market share within general insurance companies overall is between 6.5% and 7%. And we try to see that as we run a diversified set of business lines, by and large, most of them are around that percentage. Some may be a little higher, some may be a little lower. It also varies year on year because, the competition intensity changes, the opportunities in the market changes. In some years, you see very heavy price discounting, especially by the public sector companies, and it doesn't make sense to overexpose yourself. There are other years where they can't afford to discount as heavily, and we find other opportunities. In retail lines, it is less so, because in retail lines, there is a relationship we have built with customers. So we may not be the cheapest, but we know we are quick, we are fair, we are transparent, not only at policy issuance, but in claim handling. So coming back to crop insurance, it is about 6.5–7% of our mix of the overall industry's share. It again depends, as you know, there are two main seasons, Kharif and Rabi. It depends on what's the dynamic in that season. But if you were to see it over a year, it would normally even out.
Sure. When I talk about motor insurance, now we all know what's happening with Motown. It's not just COVID, but it's been a laggard pre-COVID as well for various other reasons playing out. Now we're beginning to see some green shoots. I mean, call it pent-up demand or the urge of people to, travel in their personal vehicles. Would you say that a recovery still is very far away, or is the picture looking hazy and you don't have a clear answer yet?
I would say, Aisha, the picture is still not completely clear. Yes, there is pent-up demand. We are seeing growth because of that. I believe we will continue to see growth with the big festival season coming up. Yeah. But then what happens towards the end of the year and the first quarter of calendar year 21, we have to wait and watch. It is still pretty much interwoven with the pandemic and the impact of the pandemic on local lives. For example, we saw good growth in June, July and part of August with local lockdowns. It was terrible because offices were shut down, supply chains were getting broken, and you couldn't get products out there to the market for people to buy. And this was also confusing people as to whether their jobs exist, whether they don't exist. And I think that's where we have to be very clear. This fight against the pandemic, unfortunately, is going to be there for some time till a vaccine is available or medical treatments available and are administered to the larger population. So we have to work sensibly. We have to follow the protocols that all the health experts tell us to, but we have to keep the economy running. And that's why I believe the focus on health needs to be local, but the focus on the economy needs to be national. We can't have individual cities, states randomly shutting down, because then they shut down the entire economy.
There's been an increased awareness for both life as well as general insurance. If one talks about Bajaj Finserve's consolidated profits, what do you think is going to be the share of each going forward?
Again, this is something that has evolved over time. So if you were to see 7–8 years ago, our life company contributed the largest. Then came the general company, then came Bajaj Finance. And life and non-life probably was about 75–80%. It has changed in this period of time. Today, Bajaj Finance is clearly the largest contributor. Then comes non-life and then comes life. Because there's a peculiarity with the life business. When the life business grows well, because it's a long-term policy, we pay our commissions and book our expenses in the first year under Indian GAAP. But we earn premium over a period of time. So when you grow fast, you actually burn more upfront, but you make profits in later years, so your profit comes down. On the other hand, if you go through a few slow years, then the opposite happens and the profit goes up. But naturally, you want to balance growth and profitability over there. So it's not easy to try and project out in this set of moving parts how you would distribute profits across these companies. Also keep in mind that we own 74% of the two insurance companies, but Finserve owns a little under, I think, 52% of the finance companies. So even the proportion of the profit pickup ends up being different. But the good thing is they're all growing well, and that's important so that shareholders get a diversified mix of profits from these companies.
Since we're on the subject of life insurance, the premium collections clearly got a little impacted because of the lockdown. Have things ironed out? Are collections back to normalcy?
I would say they're now back to between 80-85% of where they were earlier. And that's a very good sign.
Okay.
Our life insurance business, like our non-life, is distributed very well through the country, and that's why the recovery is quite good, because recovery outside of the top 10, 20 cities has been very strong. Top 20 cities, because of these local lockdowns in the last few months, we saw business getting impacted, and that's why it impacted Bajaj Finance more, where a large percentage of our business still comes from the top 20 cities. But it's getting better. August has been better. September is looking okay. As I said, it's very difficult to predict how local governments will react to the ongoing pandemic in coming months. But as long as it is done sensibly and thoughtfully, so that we are not only saving lives, but we are also saving livelihoods, then I think it should be okay. You should see steady improvement.
When you talk about Bajaj Finance, we've definitely some improvement in collections. People are getting back to regularly paying their EMIs. But do you still foresee any asset quality concerns going forward?
We've been very transparent, Aisha, with what we are seeing in terms of bounces, what we're seeing in terms of probable loss numbers. And we've been issuing this at the beginning of every quarter to the street, because who knows where this is going to end and when this is going to end. What we can at least do is, as we are seeing things, we can talk about that. We can talk about the numbers so that different people can project it out for themselves. And clearly, we have seen that people who took the moratorium, over two-thirds of them had never bounced with us earlier, which means they were conserving liquidity at this point of time. And that's why, while those that took moratorium in the first couple of months was close to 30%, it came down in the low teens in the last 2 months. Because as people got more confident, as cities started opening up, business started opening up, they started paying as well. And that's a very good sign. So, so I'm hopeful that things are moving in the right direction. But because it's very difficult to predict the impact of this pandemic even in coming months, we would rather be extra conservative. We have stocked up on liquidity. We are making the additional provisions. We are working with our borrowers on the collection side so that we can support them at this point of time as well, stay more conservative in our incremental lending. And as we see things improving, then get growth back.
Okay, fair point. These are unprecedented times, so I completely understand where you're coming from. A final question then, Sanjiv. While you can choose to take a look at a glass half empty or glass half full approach, I mean, what I can confidently say is that you're cashing on into what is called as the COVID opportunity, especially with the launch of the Arogya Care product and what you're doing with Bajaj Finserve Health. What's the message that you would like to give to your shareholders?
The message is very clearly, nobody wished for this pandemic. And particularly people at the lower end of the pyramid have suffered, are suffering. For those in the middle and above, it's been a time for reset, time to rethink. But given that we are in this, as they say, never let a crisis go waste. Our companies have become even more digital than before. We have plans where they will come out stronger, better, and we will see that we provide a set of solutions for our customers, keeping in mind what this crisis is teaching us and keeping in mind our customers' needs.
Sanjiv, such a pleasure speaking with you. Thank you so much for your time.